I have spent months testing and refining hundreds of scalping strategies, but most of them were either too complicated or simply didn't deliver the results I was looking for. That was until I stumbled upon one simple scalping strategy that I will use for many years to come. In this video, I'm going to teach you the exact scalping strategy that you can use on a daily basis, especially every 60 minutes on an hour. What sets this strategy apart is its simplicity and repeatability. You won't need to get bogged down into the sea of complicated concepts or indicators. Just a straightforward, easy to understand approach that anyone can master. The beauty of this strategy lies in its elegance. It relies on just one candlestick and a single repeatable entry model. I'll break it down step by step, explaining the logic and mechanics behind the strategy. And to prove its effectiveness, I will take you through live trades on real market, showing you exactly how it works in action. So guys, here we are, and so guys, the purpose for this video is to show you how to apply the previous candles high and low strategy on the 1 hour time frame to create multiple scalp trade opportunities. Okay, and by the way, before we go any more further, guys, this strategy can be applied on the daily time frame, on the 4 hour time frame, on the monthly time frame, and also on the hourly time frame, because this strategy can be used for intraday trades and swing trades and scalp trades. Now for this example, it's a scalp trade, right? So that's why we are using the 1 hour time frame. And for this strategy to work for you when you are using hourly time frame is by dropping lower from the 5 minutes time frame. So what I mean is that you drop all time frames lower than the 5 minutes time frame. That's where you're going to get your clear entries from, right? And for the 4H, you're going to drop from the 15 minutes time frame, all time frames lower than the 15 minutes time frame to look for your entries, right? So let's look at how to trade the strategy, how to trade the scalping strategy. This strategy can be traded in 3 methods or models, but I'm only giving 2 for this video, right? So let's look at method 1, right? Let's look at method 1. So this is a bullish example, guys, remember. So for method 1, we all see price coming here, right? Coming here, then it drops, right? It forms a low, starts buying just like this, right? So the whole of this price action can be found in only this hourly candle. So let's say, for instance, this is the minute 1 time frame, right? And this is its price action. But when you go to the hourly time frame, this is what you find, right? A 1 strong bullish up close candle, right? So the method 1 I look at, we all know that a bullish candle opens at the low, right? As you can see, this open, then it forms a low. That's a manipulation, right? Then it starts distributing until it forms a high and then a close, right? So that's how any bullish candle performs. After it opens, it accumulates some orders, because on every candle that opens, it opens with orders, right? If there are no orders, then the candle will either create no movement at all, right? It will be just consolidating, moving sideways. But if we find a candle like this one, it actually shows that the market participants are actually active, right? So it first accumulates orders. That's when you see little bit of consolidation, then a manipulation, because they first take liquidity. I always talk about liquidity. So they take liquidity, forming a low, then it starts distributing with high speed and forms a high and closes right there. So for this model, I don't know why I talk too much, but let's go to model 1. For model 1, guys, what we want to see is trading the 1H candle high as a reversal through resistance, or trading the hourly candle low reversal through support or as support, right? And what do I mean? Let me show you. So guys, this is what I mean by trading the hourly candle high as a reversal through resistance and trading the hourly candle low reversal through support, right? So we actually want to see this candle. If we are to trade, we probably don't need this for now because this is a bullish example, right? And that deleted actually works on bearish example, because with this method one or model one is looking for reversals, right? So here we want to see certain liquidity that formed into the most recently closed candle, right? Like this is the most recently closed candle, and we don't actually trade within this candle. We just want to see this new latest forming candle, right? That's what we are actually trading, and we want to see a sweep above this candle, a slight sweep above this candle, and then look for your favored entry model for you to take trades to the opposite direction, right? And your target shall be at this low, the low of this candle, right? And that is model one, right? So straight away, guys, without wasting any time, let's go to model two or method two, right? This is our model two, right? And it's still a bullish scenario, right? So what we want to see on the model two of this strategy is actually we wait for this most recently closed candle to close, right? Then we wait for this. In simple terms, it's a continuation, right? And we want to see this type of market structure on the lower time frame when price is forming imbalance and it's on a speed to fill or sweep particular liquidity on certain areas, right? So guys, I think I'm going to draw a diagram as an addition of this, right? But before that, let me first explain a little bit more, right? So as you can see here, this is, as I told you, that this is the candle we're trading, right? Not this one. So we want to see right at this candle close, because at this exact point where this candle close is where the other candle is going to open. So it does not matter if you consider this as your open or this as your close, right? So you may use this open or a close, right? So we actually want to see a certain sort of a retracement into 50% of this body candle, right? Because in within this zone is where we are looking to catch our buy continuation entries for this candle, right? In within this, the recent closed candle is low and close. We don't include the high, right? Because the high could act as our target for this candle, for this trade, right? Because if you get yourself an entry, let's say at this low, and consider this high as a take profit, that's really a great movement on the lower time frame. So I'll try to illustrate this same price action on this side as we want it on the lower time frame. Here we are on this example. We're still on this example. So as you can see here, this is when you go to the hourly time frame, this is what you're actually seeing, right? But when you go to the lower time frame, like the 5 minutes, 3 minutes, 2 minutes, and 1 minute, this is what you actually see. It's more broken down for you guys to look for some sweet possible trades, right? So here, this price action it indicates this candle one, right? Then this candle two opens, forms a low to manipulate or to retrace back into this tradable zone, this orange box you're seeing here, and assuming that at this time frame, this lower time frame, we found a particular PD array for our entry, and we saw our entry model forming, taking the trade right away. And by the way, guys, this trade setup doesn't matter whatever strategy you use. So as you can see, this entry model, you can actually call it a break of a neckline or market structure shift or a change of character, right? Whatever you want to use, and you can determine your profit target using, right, using a Fibonacci tool, right? Like for example, like the standard deviation, we measure this dealing range where price recently retraced into, and you can see our -1 standard deviation stands all the way here. And remember what I told you earlier, that price is bullish, and this is a second method, or call it a continuation, right? How to catch a continuation using our one candle strategy, right? And I have already told you the method one of a reversal, right? So yeah, I think that's all. I've told whatever you want to know, and let's go into some live examples, and I'm going to give two examples, one for a reversal and one for a continuation. So guys, let's dive into. So guys, here we are on our hourly time frame, and we want to zoom in and see how model one can be used in the live market, right? So this is our hourly time frame, right? So what we're going to do is mark out our candles high and lows, right? Highs and lows, just like that. And we wait. After that, we're going to wait for that candle to close, right? So as you can see, we have now marked its high and low. So we're going to wait for that candle to close, okay? Okay, so the candle has closed, right? This candle has closed. Let's see this one, and we're going to wait for this candle to close its high or its lows. Okay, okay, we haven't swept candles high or low, so we're going to extend it to the most recent candle, right? The most recent closed candle, right? So then we wait for a sweep. As we can see here, that we actually got a sweep. So let's go to the 1 minute time frame and look for that one entry model. And before that, we have to mark out where our candle started printing from, right? Right, so there is where the candle actually started printing from, right? So we drop to the 1 minute time frame to look for that one entry criteria. So as you can see, these lows right here have been raided, right? So you want a quick push above this high, right? And we want to make this block, this down close candle, a mitigation block, right? So let's see. Okay, so there we are. So we're going to mark out our mitigation block, right? We take our long positions right here, and I think this is another candle, right? I think this is another candle. Let me show you. This was the 9 a.m. candle, right? Then this is the 10 a.m. candle, right? So we're going to put our take profit at the 9 a.m. high, right? We also have this liquidity right here. Liquidity is any relative equal highs or lows, or high or recent highs and lows, right? And our stop loss is going to be placed around this low here, right? To give us a 1 to 2 RR. So let's play price and see how it goes. Okay, as you can see right there, so this trade was a success. So remember, this is a model one, and model one can be used as a reversal for the strategy, right? So let's see if it actually takes out that 8 a.m. candle high. So right, okay, we can see how effective this strategy actually is. See how effective that is. Almost a 1 to 4 RR. Okay, just with this single candle one candle strategy. So guys, let's go straight and look for our method 2 or type 2 example, right? So here we are guys on our method 2 example, right? And as I told you is that we only use this method when the market is going in one direction, right? You can't use this method when the market is consolidating, otherwise you hit stop losses, right? So here we are. As I told you, we first mark out the candles closed, the recent candles closed, right? And then the recent that recent candles low, right, which is this one right here, right? Then we want to see the that candle that is printing to retrace back into this tradable zone, right? That is our tradable zone, at least 50%. Then where is our target? Our target is that recent candle closed high, right? And I'm going to label it as black, right? So that's our target. Let's drop to the 1 minute time frame, right? And I have to actually put where this candle is going to start printing from. So let's see its behaviors. We really want it to retrace, right? Okay, that's a good. Okay, it's retracing. Okay, it has provided an entry. Not yet. Okay, now it has provided an entry. For those who don't know any entry criteria, any entry models, you go into my YouTube, check the video I recently posted. It has a very good unique entry model, right? So we have this FED, and we have actually seen price rallying through this high right here, this swing high right here. So that's a very good information, right? So we want a retracement now. Are we missing the trade? Yes, of course. So we have this BPR right here, and let's see if we get a retracement there. So price has given a very quick retracement, and that was a very quick one. So assuming we got stopped out on this entry right here, stop loss right there, and take profit above that string high, because we're looking on the right of range above it, right? So again, we have got another new entry, right? So I want a retracement. I have already seen that upward movement is kind of strong, right? And price has already hit this liquidity right here, so it has no point of coming back, right? So let's see how price moves. This is actually a 1 to 2 target. So let's see how price goes. Okay, as you can see, this entry, the reason as to why I've done 1 to 2 target is to recover this loss, right? And that's how I actually backtest, and that's how I actually do trade as well, right? So both methods are effective depending on the market condition, and I'm going to repeat again and again that this works in volatile markets, right? That's when you're going to need a retracement and look for entry criteria and take that entry, right? So that's it guys, hope you have learned something, and subscribe for more videos like this one. Go did effects. I sign out.